For the first time since the outbreak of the corona pandemic, one of the major central banks in the Western world has raised interest rates again. The Bank of England raised the key interest rate by 0.15 percentage points in response to the high rate of inflation. And the British Central Bank is resisting the high rate inflation and raised its key interest rate for the first time in the corona pandemic. The key interest rate increased by 0.15 percentage points to 0.25%, as the Bank of England announced after the meeting of the Monetary Policy Committee in London. Most analysts had expected unchanged interest rates. It is the first rate hike among the G7 countries since the outbreak of the corona pandemic. The rate hike comes as a surprise, commented Thomas Gitzel from VP Bank. Presumably, the central bank found itself in an emergency versus misery situation. Many professionals were unsure how the Bank of England behaved because the monetary authorities are in a dilemma. Inflation in the kingdom is high, which speaks for rising interest rates. At the same time, however, the new corona variant Omicron is spreading rapidly and dampening economic activity. After the BOE shrank back in November before the interest rate turnaround, concerns about the inflation risk have gained the upper hand today, said Elmar Völker from the Landesbank Baden-Württemberg. Alexander Krüger from Bankhaus Lampe was similarly surprised. He said, "The urge to increase interest rates is apparently greater than the economic threat posed by Omicron. Given the high number of new infections, the interest rate hike is courageous." The development of the pandemic is likely to be more decisive for further interest rate hikes. The background to the decision is the high inflation in Great Britain, which exceeded the 5% mark in November and marked a 10-year high. Most recently, at 5.1%, the rate of inflation was well above the central bank's target. Further rate hikes by the Bank of England must be taken into account, especially since inflation will probably only peak at around 6% in April, said Ralf Umlauf from the Landesbank Hessen-Thüringen. The prices are driven by, among other things, the sharp rise in energy costs and the shortage of materials and delivery bottlenecks resulting from the pandemic crisis. Economists are also warning of a self-tightening wage price spiral should employers demand higher wages to compensate for the sharp rise in prices. These factors are also fueling inflation in the US, so that the US Federal Reserve is considering several rate hikes for next year. The decision of the MPC Monetary Policy Committee at the Bank of England was not unanimous. 8 central bankers, including central bank chief Andrew Bailey, voted for interest rates to rise. The central banker Silvana Tenreiro, however, voted against an immediate interest rate hike. The Bank of England indicated the need for further rate hikes, albeit at a moderate pace. That the central bank did not make it easy with its decision is also shown by the recordings of the interest rate meeting, which were published at the same time. It says that the appearance of the Omicron variant actually spoke in favor of waiting to examine the effects of the new mutation on the economy. On the other hand, the high inflation demanded a timely tightening. The British pound acknowledged the interest rate hike with significant gains against the dollar and the euro. British government bonds, on the other hand, came under pressure and, in return, capital market rates rose. UK stocks lost some of their previous gains. And I'll see you in my next video. Bis gleich.